We've seen a huge data center boom just over the last 5 years, but specifically the third quarter of this year has shown us a lot of drastic changes in the market. And we have hyperscale capital expenditure reaching over $350 billion in new capital. And we see this not only just amongst hyperscalers like NVIDIA, Microsoft, AWS, but we're being able to understand that demand is very, very high, and AI is growing at a almost incompatible rate. And when this happens, we see that you obviously need energy to supplement whatever demand these data centers have. And that's why we see energy consumption reached over 250 terawatt hours just over the course of this last quarter. And with such a large boom, it's important to see how the market is responding, because we see co-location vacancy was at an all-time low this previous quarter with 1% across all primary markets. That would be Virginia, Texas, California, Georgia, Arizona, Nevada. And we see that most importantly, most of the new projects that have been pushed out have actually been pre-leased already. So a lot of the planned projects coming into fruition have already finalized deals for space within these facilities. And I think, Ryan, if you want to speak a bit more to that as well, I think you're well versed enough with the market to tell how strained resources are at this point in time to reach the demand that these hyperscalers want in the market.
Definitely. Out of the several conversations I have a day, it's all about data center development and the power dilemma that we're facing that we've already alluded to. One thing I wanted to talk about was actually an article that I read this week from Data Center Dynamics, and it's JLL, which is a real estate advisory group, who has just put out an RFI to landowners to just throw their parcels in a hat so that they can be considered for one of their undisclosed hyperscale partnership deals. And I believe that was a 200-acre site in terms of parameters, with 400 megawatts of capacity that they were looking to generate for one of their partnerships. But you can see a number of different groups starting to get creative, pulling out all the stops in order to stay ultra competitive in this market. And with that, we are still facing a lot of the same headwinds across a number of different verticals that we're also starting to see a ton of collaboration within as well. I wanted to highlight how our supply is not meeting the demand, and that's specifically because our grid is exhausted.
Just to harp on the point about the grid being exhausted, I wanted to share some stats about just how much power we've seen in the last quarter. And we've seen over 9 gigawatts from Virginia itself just go online. We've seen, if you can reference the graphic on the right, I mean, you see 25 gigawatts of planned power just in Virginia, around 14 in Texas, a little bit less in California because of space constraints, but we're hovering between 5 to 10 gigawatts for Georgia, Arizona, and Nevada, which, I mean, out of which Georgia, Arizona, and Nevada weren't considered primary markets or large hotspots for data centers, even just, I would say, last year. So we're seeing a lot of growth here, and I'll pivot it back to you. But I mean, it's really important to note that this is a lot of power, and to supplement this power, sort of, what do we need to do?